method. These are the quantitative methods. Next we are going to see about qualitative control methods. First one is moral suasions. The central bank requests banks to lend more, not to lend in some sectors. That is the sectors of the economy: agriculture sector, industrial sector, priority sector, non-priority sector, just like that, farming sector. So the central bank requests banks to lend more or not to lend in some sectors. So the RBI direct banks to give more loans to priority sectors and request the banks not to give loan to non-priority sectors. So this is a legal compulsion behind their acceptance. So as per the instruction given by the RBI or central bank, the bank lend loan to priority sector or non-priority sector. Okay, and next one is distinction between central bank and a commercial bank. A central bank enjoys supreme power in a country, but commercial bank has no authority. Profit motive: central bank has no profit motive, but commercial bank has profit motive. And central bank provide money supply because money is issued, currency notes are issued by central bank. So money supply is done by central bank. But commercial bank did not perform money supply. It just create credit creation only. And the central bank act as a banker to the government, but commercial bank is a banker to the customers only. Chance of failure: it's a lender of last resort. It's a lender of last resort and has never fails. But commercial bank undertakes certain risky business activities, sometimes may fail. Sometimes the commercial banks lend money to unworthy people, that is unfit people. At that time there may be a possibility of burdens. Ownership and managing authority: a state owned and state managed. Central bank is managed by state owned enterprise, but it is commercial bank is privately owned and privately managed. Nature of operation: it issue paper notes. In fact, it enjoys monopoly power in this matter, because no one has a power to issue currency notes. Central bank has a sole authority to issue currency notes. And credit creation is a main function of private sector banks, that is commercial banks. Basis of operation: that is cash money issued is gold or foreign reserve. So there is RBI hold gold, silver and foreign exchange reserve for issuing note purpose, but commercial banks only generate money from cash deposits from the public. Okay. And financial institutions: let us see about the financial institution. Apart from banks, apart from commercial banks, cooperative banks, there are certain banks which are namely development banks, which are functioned for promoting the industrial sector of the economy. And the first industrial sector bank is Industrial Finance Corporation of India after independence. That is in the year 1948, July 1, IFCI is established. It's a pioneer development bank. At the time of starting, its authorized capital is 10 crore and in the year 1972, it was raised to 20 crores. And the scheduled banks, insurance companies, investment companies are their shareholders. And on 24th March 1993, IFC was passed in order to privatization, as it is privatized. And functions of IFC: there is granting loans and advances to the industrial sector, subscribing the shares and debentures floated by industrial concern, guaranteeing loans taken in the capital market, guaranteeing loans in financial currencies, and guarantee deferred payment in respect of imports. And financing policies: its financing policy is it's going to finance a new project. In case an entrepreneur come for finance a new project, means it is allowed. And a project exploring new area of technology: in case the project is based on new area of technology, it is acceptable. Project involved in producing inputs for agriculture. So in order to promote agriculture sector also, IFC has taken steps. And a project producing essential goods for consumption, it grants assistance sector wise, industry wise, state, territory wise and less developed areas. So that is Industrial Finance Corporation of India is a pioneering institution which hold support to the new and budding entrepreneurs. And on the basis of, that is by following the footsteps of IFCI, another important institution, Industrial Credit and Investment Corporation of India, was established. Its main objective is to provide foreign currency loans, to develop underwriting facilities, to help private sector units. ICICI differs from two other All India Development Banks, mainly IFCI and IDBI, because it is entirely different. It is a private sector development bank. IFCI and IDBI are other financial institution category. ICICI come under a bank category. Its main functions are expansion of private sector industries, give loans as foreign currencies, underwriting purpose, to promote private capital, to private ownership of industrial investment. Okay, and in the year 1955, that is, it is established. And IDBI, Industrial Development Bank of India. In 1964, IDBI was established. It is a wholly owned subsidiary of Reserve Bank of India till 1976. After that, it is converted into a bank. And it is now managed by separate board of directors. And it is a coordinating agency for getting a relationship among term lending agencies. It provides direct finance to the industrial sector when industrial sector cannot procure funds in the normal course. When an industrial unit cannot get loans from the banks, IDBI assists by way of Development Assistance Funds, shortly known as DAF. To assist the creation, expansion and modernization of industrial units, IDBI lend money. To encourage and promote foreign private ownership of industrial investment along with the expansion of investment market. It provides export finance because a industrial unit which wants to export their goods to foreign countries means IDBI grant financial assistance to that export unit. And next one is State Financial Corporation. State Financial Corporation was established in 1951 after 3 years of the establishment of Industrial Financial Corporation of India. And the first SFC was established in Punjab in 1953. The public can hold 25% of shares, rest are held by the state government. The main functions are guarantee loans to be repayable within 20 years. So this guarantee given to long-term loan and grant loan for long term, that is for 20 years they give loan, subscribe shares, bonds and debentures. And next one is SIDC, State Industrial Development Corporation. There are 24 nowadays, that is up to this date, there are 24 State Industrial Development Corporation in India established with the objective of rapid industrialization in the state. So these institutions providing assistance to small entrepreneurs, budding entrepreneurs and developing entrepreneurs who are setting industries in a backward area. So the main purpose of starting industries in a backward area is to remove regional imbalances. So the SIDC help to remove regional imbalances by helping entrepreneurs. And Industrial Reconstruction Bank of India, it was established in the year 1971 and its authorized capital is 200 crores and it's a statutory corporation of Industrial Reconstruction Bank of India. Likewise, it provide financial assistance to sick enterprises because other institutions are providing money to industrial sector, growing sector, budding entrepreneur. But it find out who are the sick industries and provide assistance to recover from the sickness. Providing merchant banking services for merger. In case a sick unit means it is merged with the healthy unit, amalgamation. So it provides that type of consultancy services and securing finance from other institutions and government agencies for the revival of sick units. And next one is BIFR, Board of Industrial and Finance Reconstruction. It was set up in 1987 under the Sikh Industrial Companies Act 1985. The board consists of 7 members. So the 7 members analyze the application given under BIFR and a industrial unit is considered to be sick. It apply for BIFR. Within 60 days, it takes steps to recover from the sickness. There is change management or selling or leasing a part or entire unit, take measure for merger, give the sick unit a time for overcoming their problem. So they help to revamp from their sickness. And UTI, UTI is used for mobilizing deposits. There is mobilized savings. In the year 1964, it is established. Its main objective is mobilization of savings and make available benefits to equity investment of small investors. It provides assistance to small investors. UTI is managed by a board of trustee and executive trustees appointed by IDBI. RBI nominate one trustee and 4 trustees of IDBI. Okay, and Exim Bank for helping importers and exporters. A separate bank is established in the year 1982. It's a non-bank financial intermediary. It helps to promote exports. Its functions are export bill rediscounting, refinancing of supplier credit, bulk import finance, product equipment finance scheme, business advisory and technical assistance. And next one is NABARD. NABARD is an institution especially developed for promoting agriculture. It was established in the year 1982. It's an apex body in the rural credit system. It took over the functions of agricultural credit department of the RBI. It power to borrow from the union government, borrow from the foreign currency. It operates through 16 regional offices. Its main functions are provide all sorts of reference to cooperatives. It inspects the above 3 agencies and advise the government. NABARD undertakes the evaluation and monitoring of project financed by it. It is responsible for development of rural credit and agriculture sector. LIC. LIC is an insurance company. It is covered by IRDA Act 1956. Now 245 insurance companies are there. To protect the interest of the policyholder is the main objective of insurance company. It mobilizes money in the name of premium from the policyholders. While death or attaining a certain age, the money is returned to the policyholder. There are 2 types of insurance, life insurance and general insurance. There are lot of type of general insurance policies. Among them, 2 are more important. First one is fire insurance and marine insurance. So general insurance company means there is fire insurance, marine insurance, burglary insurance, workman compensation insurance, lot of there. So all these help the people to recover from the risky situation. And next one is Securities Exchange Board of India. It was established in the year 1988 and it's a statutory recognition in the year 1992 to provide basic details about the stock exchange to the stock exchange holders. That is regulating the business in stock market, prohibiting fraudulent and unfair trade practices in securities market, regulating working of collective investment schemes. It has a power to brought under the annual inspection of SEBI and oversee the constitution as well as operations. And next one is Asian Development Bank. It was established in the year 1966. It is engaged in promoting socio-economic progress. It is owned by the government of 37 countries. Its headquarters is Manila, Philippines. The bank's highest policy making is Board of Governors. And then its objectives are poverty reduction, promoting economic growth, supporting human development, protecting the environment, improving the status of women. And next one is IMF. IMF means International Monetary Fund. It was established in the year March 1947. So before independence it was established. Its main objective is cooperation through joint action of the members to promote foreign trade, to maintain stability in foreign exchange rate, multilateral convertibility. Its functions are provide short-term credit, function as a lending institution, grant lend to the needy people, help for orderly adjustment of exchange rate. That's all. Next one is World Bank. World Bank is nothing but Asian bank. It helped reconstruction of member countries' damages due to the Second World War. Because during Second World War, all member countries are affected. In order to reheal them, a World Bank provide lot of steps to facilitate the investment of foreign capital, to promote balanced growth of international trade, to promote foreign investment, private foreign investment. The World Bank took lot of efforts. And next one is International Development Association, IDA. It is established in 1960. It is affiliated to World Bank. It is an affiliation of World Bank. The capital funds of IDA comes from the subscription from member countries, special contribution by member countries, transfer from the net earnings of World Bank, and general replenishment from more industrialized members. IDA loans can be used to finance both foreign exchange and local currency notes. So that's all about the financial institution of our economy. Thank you.